Alright guys, welcome back to the channel Techado again. And in this video, I'm pretty sure you guys saw the video about PegXC, about breaking down about what actually was posted on Twitter, and what actually it means for us. And there is some core stuff that over the span of like 5 or 6 months I did not talk about, and I wanted to talk about this for a long time, is going to be in technical analysis. So it is all of you people, those who are stuck, like all of us actually, me, you, everybody, those who are stuck in this whole PegXC journey and everything, that there is other coins that you can actually try to scale, and you can analyze it for yourself, when to buy, when to sell. Now, a lot of these exchanges, a lot of these places, they try to pitch you about a long term, but the realm of crypto is not long term. It's very volatile, and in a volatile market, um, if nobody is like keeping long term, might as well you work for short term. Short term is not an ethic in stocks and everything, because that's where you'll be probably facing a lot of trouble if you are doing short term gains on stocks and everything. But do adhere to your local community, do adhere to your local rules about what you know about short term gains. Like for example, what is the tax percentage in short term, what is the tax percentage in long term? Out here in United States, short terms, you have to pay more tax. And I do not know which country you're watching this from, but take note about that at first, and then you want to decide whether you want to go for a short-term route or a long-term route. Okay, now with that said, let's go to stream watching and actually basically desktop live scene. And here, in this video, we are going to share you some important factors that, or some important key indicators that you look at whenever you are scaling a coin. So for example, Dogecoin has been doing great for the last 3-4 days. It was a pumped up coin. Existence of Dogecoin is basically through whatever Elon says and whatever he tweets out. The reason why Dogecoin is pretty popular, because for some reason I think SpaceX employees are pretty, bullish about this. But if you go to Tesla and you go to Tesla.com, Jesus Christ, I don't want to go to Carvana. Uh, Tesla.com, go to shop, and then you go to lifestyle, and then you scroll down all the way, you will see that a cyber whistle actually is selling for 1,000 Doge. As a matter of fact, I actually tweeted this out yesterday on my Twitter, I think so. Home and notification. It's home. Okay. By the way, this is the tweet that I posted. This is the tweet that I posted. That may as well make content creators and influencers to pay Twitter Blue with Dogecoin, and you can buy stuff from Tesla, because for 1,000 Doge, might as well just allow to do that. Well, apart from all of this, let's go back to our original topic about scaling these coins. So what is advanced decline ratio, what is AO, what is Trix, what is RSI? These are some factors or indicators that you need to consider while when you are buying and selling at the same time. Now, RSI is considered to be as one of the best indicator for cryptos. Whenever you're doing exchange and everything, what is RSI? It's basically relative strength index, and it is an indicator of momentum. um, Indicator of momentum being that whether the market is going forward, or whether the market has got more selling going on or not. Now this indicator is usually again used, not in a crypto thing on an aspect, it's more used for like stock aspect and stuff like that. But usually an RSI, it is displayed as an oscillator, and it will go from 0 to 100. If I can scale this, So as you can see that it will go from 0 to 100. That's what you are trying to look into a scale. But RSI can also do more than a point of overbought and oversold securities. So it also indicates like securities that may be primed for a trend reversal or a corrective pullback in price. Traditionally, an RSI reading above 70 or above indicates an overbought situation, and an RSI below 30 indicates an oversold situation. Traditionally, it's that, but as you can see out right now, around about 30 to 30.75 is your oversold kind of indication. And out here we'll be seeing round about top line of 50, I think so, yeah, 70, around about 70. So that's a very good indicator, and usually everybody tries to use this. Now a lot of people use bots, but here we are not talking about bot smart contracts or not. How do you know whether people are using bot smart contract or not? Just go through Dextools. Dextools probably is the best place, or the, to analyze and all that stuff, and look into these. You will be seeing that people are using different sort of bots, because nobody wants to, people those who are short selling, they don't want to do it every time by sitting there and analyzing. It's better to get a bot. There are multiple bots that are sold, and you can see that you'll see a sign of bot smart contracts and everything. And the play is this: basically what you're doing, you're short selling. Short selling again is not at all ethical. It hurts the market over the long time. It hurts like investors, those who are planning for long time investment, a lot. But it is non-regulated, so the whole market is non-regulated, and hence comes the factor of exchanges trying to pitch you long term, and keeping stuff long term. Take for example exchanges like Voyager and everything, which have filed for bankruptcy and stuff like that. Like, you never know what's coming up. So that is the reason, because of that insecurity, a lot of people just use this for a short term. So RSI is a very key indicator, and it is a very, very popular momentum oscillator. So remember this: you just have to watch whether it is going below 30. Whether, if it's gone below 30, like for example in this scenario, you see for the advancements or anything, once it's below 30, make sure like you are getting ready for buying and stuff like that. So for example, as you can see right now, this is more or less holding the trend between 30 and 70. When you see this go above 70, which means there's a lot of buying pressure, that means a lot of people are buying, and that's where it's on an overbought kind of a situation. Last time I saw this was around about like 230, which I missed. And at that time it was at 74, 75. I can actually move this, actually go up a little bit. We can bring this down. Yeah. And we can actually keep this up. I think this will be our number one to measure RSI. RSI is probably one of those indicators that you should have all the time in your hand whenever you're watching charts and everything. Even the candle chart shows you green or anything, you still know when to purchase and when to sell it. The next comes is the next that's going to be, it's going to be the advanced decline ratio. And advanced decline ratio is pretty basic, and everybody uses it just because on indicator probably like it's the third thing. I mean, accumulation distribution you should not even bother, because it's when you're in crypto and you're scaling like coins like Dogecoin and stuff like that, accumulation distribution curve doesn't even apply on this. Your best route is probably RSI at first, then is Trix, then is advanced decline and oscillator. But in advanced decline ratio, it's basically that plots the difference between the number of advancing and declining amount of purchases that's made on a daily basis. Again, usually comes from stocks, and the indicator is very cumulative, with the positive number being added to the prior number, or if the number is negative, it's subtracted from the prior number. So how are we going to understand, and how can we use this advanced decline ratio as an index? Well, there is multiple things to to do with this. The first things first that you have to again remember is that you have to compare these slopes. These slopes are pretty important in AD or advanced decline. Basically, all you're doing is comparing these slopes one by on both of them. If the indexes are moving up, but the advanced decline line is sloping downwards, it's called bearish divergence. Okay, which means that the signs that the markets are losing their breadth, their volume, and it is about to be in the reversal direction. Now, if the advanced decline line is up and the market is, trending upward, then the market is said to be healthy. So that's what you need to remember in a very, very nutshell. I just want to say that it is not that very important, but you should have this just to reconfirm with RSI, just to reconfirm with Trix. But again, one of the most important indicators probably, I would actually put this at the bottom, um, out here. One of the most important indicators again is Trix. But to talk about Trix, actually, hold on a second. Yeah, to talk about Trix, at first we have to talk about oscillator. Well, this is probably one of the stuff that you probably already know if you are already into this video, watching this video, and trying to understand whether you want to add something to your tools or not. Well, it's basically an oscillator means that it constructs a high and low bands between two extreme values, and then it builds a trend indicator that fluctuates within these bounds. So traders basically are using this to discover like short-term overbought or oversold conditions. Okay, so when the value of the oscillator approaches upper extreme value, basically that information means that the asset is overbought, and it approaches a lower a lower value, that means that the asset is oversold. So basically you can take it like this, that oscillators are momentum indicators, and you can find this to be as a basic tool to be for any sort of technical analysis, whether it's stocks or any sort of market data and stuff like that. And oscillators are often combined with moving average indicators to signal any sort of maybe reversals or like trend breakouts and stuff like that. Usually painted in green and red, and a lot of people so this is like more buying, more buying, more buying, more buying, but you have to still see that um, an upward of the ISO line, which is 0. So this curve is what you're looking at this point. It has already reversed, which means that basically now you are in an oversold condition, kind of you're reaching that oversold condition, and all people are looking for this reversal, because reversal is where you sell, and when it is like all the way to the rock bottom, you just keep on buying it. Okay, so when an oscillator exceeds 70 to 80% of its specific total price range, signifying a sell, it signifies basically a selling opportunity. An oversold condition exists when the oscillator fall below 30 or 20%. And basically this is all your, take this as sort of accumulation and selling and stuff like that. How much it has been accumulated, how much is getting sold. It is a good indicator, but probably not as good as Trix. Usually in stocks we use more like trend and everything, but out here you can go for Trix. So what is Trix? Basically it's a triple exponential average. Trix is a better indicator, and it's a way better indicator in oscillator, and it is used to identify sold and overbought kind of a market. So it's basically again a momentum indicator, and as you can see right now, let's put this up a little bit. So these two, they go together. your awesome oscillator and Trix, they go together. So this is your ISO line, which is your 0. And as you can see, the market is still in a oversold kind of a condition. So basically, again, there is no volume getting added to it. Most of the contracts does show that it is on a downward trend. In a nutshell, I mean, I'm basically explaining you in a very, very easier way. And uh, it is far from reaching that 0 because it's sitting at negative 3.35. And that is exactly what you are looking for. Yes, there is more stuff on details that you need to look about. I will post a small PDF document that you can find in my Discord channel if you want to go in depth. I'll probably complete preparing all the PDFs in a very, very easier format in my Discord. So do join the Discord, and we will come back and talk with you on another video, which I think I've scheduled for tomorrow and stuff like that. So yeah, but I mean, I wanted to make this happen into multiple videos explaining you through like multiple points. But do remember this: you're watching into RSI, which is relative strength index, Trix, which is triple average, like thing, like, and AO, which is your oscillator. They call it awesome oscillator. Um, Advanced decline curve. I mean, you can kind of skip this, but I would still give it to triple exponential average, which is Trix. So Trix, AO, AD, this is what I look at. And with this, you can go for like this also. As you can see, like I pretty much look into this and everything. And as a matter of fact, Trix is reaching at that 0 mark where you can gain RSI is pretty good, relative strength index is pretty good. And this is a sign about different coins like in PegXC and everything, that right now it's basically traders that are trading and trying to make some more money. It is not about um, like people dropping in some sort of money or anything for this game of PegXC. So that's all, folks. Take care. See you folks on another episode. Till then, take care, and we will be back I think next week. Good night.